Hi, this is Zak Mir from Master Investor, the investor conference on April the 25th in London, with a look at some bulletin board hero stocks. And I'm starting off with Amedeo Resources, where it looks as though we've got this rebound off former late 2013 support just below 0.5 pence. Line of support here from May last year going towards the 0.44 pence, which is the 20-day moving average. And also worth noting an extended RSI uptrend line from the end of 2013 going through this October and now February lows. That should provide extended momentum for the share price over the near term as we look for a sort of basically what would be a double bottom from late 2013. Ideally, we get a decent end of day close or end of week close today above the 50-day moving average at 0.49 pence, and that takes us back to the main resistance here for Amedeo at 0.8, 0.9 pence over the next 1 to 2 months if we have if everything pans out in the way that is expected. Next up is Gulf Keystone, where I've been sort of looking at it rather closely, investigative charting, I think. And what I'm sort of seeing here is a possibility that we've got a similar rebound opportunity now for February as we had in October. You see in October there was this quite sharp probe towards 40 pence, and then this recovery of the green 10-day moving average, a little sort of flag, and then the breakout. Looking for a similar situation to happen here. Obviously, this is looking on the bright side and assuming that there are no nasties as far as the crude oil price is concerned, or obviously news from the company itself. But we've got this these support points at the 10-day moving average and also the floor of this descending price channel from August at 49 pence. So an end of day close back below 49 pence is currently the stop loss on the recovery argument. And the hope would be that we would return towards the former initial January support at 60 pence initially, and then maybe up to 70 pence by the end of February or early March. As I said, if we have a repeat really of this October recovery pattern. Next up is a stock which quite a few people seem to be following at the moment, Union Jack Oil. I had another look at it late yesterday as well, and sort of thought that the best fit for the price action over the last year or so is actually a rising trend channel from the beginning of the year. Before I had it as a sort of descending flow, but it looks as though here you got this the price action has actually seen this this line here in October, then December, and then January as well. So it's effectively a triple test of this price channel floor. Then the bull flag above the 20-day moving average at 0.2 pence, which is now the end of day close stop loss on the near-term buy argument. You can also see that the 200-day moving average here has actually gone from falling to flat, which is a positive move. So we would be looking for the 50-day moving average to cross above this 200-day line later in February. Initial resistance 0.28 pence, and that's obviously the initial target. Ideally, we'd have an end of week close this week or next week above that, and then that would take the shares on to 0.4 or 0.5 pence. But the sort of that if you're sort of less bullish on this stock, you say it's in a range between 0.2 to 0.5 pence. Otherwise, you'd be looking for this to sort of accelerate to the upside after all this sort of this bear trap that we've had below the April support at 0.2 pence. So one to watch out over the near term. Finishing off with Xcite Energy, where I've also been looking at it closely. The situation here looks to be that we've got this descending price channel from July, and the latest rebound looks to be in the same ways that we've seen at Gulf Keystone, a rebound both off the floor of the channel and also the 10-day moving average. In this case, that's at 30 pence, and that's the end of day close stop loss on the recovery argument. If you're cautious on the shares, you'd wait for an end of day close above the 50-day moving average of 35 pence, as that's blocked the price action. You can see this blue line here, blocked the price action since October or September. The target above the 50-day line could be towards 50 to 55 pence as a best case scenario over the next 4 to 6 weeks, or 4 to 6 weeks after the 50-day line break. And that would take the shares back up to really where they were in the autumn before the oil price fell. That's it from me. More updates at masterinvestor.co.uk.